Today we are from Group 1 and we would like to present our topic. But before we begin, let me introduce our group members. There are 4 of us. First, my name is Nur Anissa Sakira and my members is Nur Sharmin Iman, Siti Nur Shakira and Tilvarsa. For your information, madam, we work together equally, sharing ideas and tasks to ensure our presentation runs smoothly.
Okay, hi. This is the question for us. At first, we need to discuss about any form measurement of the elements of financial statements or assumption applied in the above scenarios. At second, interpret any 4 most appropriate qualitative characteristics from the above scenarios.
Introduction. The Jozan Carpet case study explains a number of crucial concepts in financial accounting, most importantly regarding measurement of financial statement component, assumption, and qualitative characteristics. Johan and Zizan, the business owner in common, have made various types of asset and capital into the company, alongside managing loans, credit sales, depreciation, and asset appraisal. This circumstance provide a real-life context to observe how accounting principles are applied to the working of a company in real life. By analyzing this circumstance, we can apply theoretical accounting principles to actual business practice.
Today, I will explain about elements of financial statements related to the question above. The first one is honest equity. Honest equity means the amount invested in a business by its owner. For example, Johan contributes 60,000 cash, while Zizan contributes a building worth 150,000. This shows that Johan and Zizan puts initial capital into the business. So, in short, honest equity is the honest share or investment in the business.
Okay, for now, the second element for financial statement is liabilities. These are legally binding obligations payable to another entity or individual. Like example, Johan and Zizan took a loan from bank amounting Rm800k. So, Johan and Zizan took a loan from bank to add additional capital into their business.
Accounting assumption. First, historical cost. The definition of historical cost is measure of value in accounting in which the price of an asset on the sheet based on original cost. For example, the business maintains to record the value of this non-current asset at their purchases values in financial statement. They show that the assets are recorded based on their original acquisition cost, not current market value, it assuring objectivity and verifiability.
Going concern concept. This concept is the belief that a company will continue to operate indefinitely. For example, Johan and Zizan expect the business to survive in the foreseeable future. This shows that they see the business as sustainable and successful in the long run.
Okay, for now, qualitative characteristics. At first, relevance. The information can influence the economic decisions made by users. Example, the business will record the credit sales when the carpets are delivered to their customers. Johan and Zizan record every selling assets values in their business.
Next, we have understandability. This means that preparers of financial information have classified, characterized, and presented the information clearly and consistently. For instance, the business records all transactions in Ringgit Malaysia. This shows that Jozan's business uses Ringgit Malaysia as a currency, making the financial information easy to understand.
Consistency. The definition is the entity use the same accounting principles, methods, and practices for similar transactions from one period to the next period. The example is the business maintains to record the value of this non-current asset at their purchase value in its financial statement. They show that the business used the same measurement basis for asset, applying the same method every year.
For the last qualitative characteristic is faithful representation. Faithful representation implies that financial information faithfully represents the phenomena it purports to represent. For example, Johan contributed 60,000 cash, while Zizan contributed a building worth 150,000 ringgit. They also took loan from bank 80,000 ringgit for the business. They show all the information provided must be accurate and free from bias. So, in short, faithful representation ensures that the financial statements show the truth. Conclusion: in all the operations of Jozan Carpet clearly demonstrate the application of necessary accounting elements, assumptions, and attributes. From recording contributions and loans to applying depreciation and credit sales, each scenario reflects how financial reporting is accurate, dependable, and consistent. This supports the fact that proper accounting procedures are required in providing useful financial information for decision making. Ultimately, such principles not only enhance transparency but also facilitate the sustainability of the business in the long run.